Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. This channel's for you. We are looking at a commodity super cycle ahead of us. So we're doing a lot of technical analysis, we're doing fundamental analysis, we're doing all sorts of things to prepare ourselves for a commodity super cycle. That is where the value is in the market. There's a question here. William asked, if weighted, how much emphasis would you give to TA, technical analysis, and fundamental analysis? I know chartists assume price action accounts for fundamentals, but I'm curious how you value one over the other. Is it safe to assume you rely more heavily on TA, technical analysis? Any thoughts on EQT would be appreciated. Thanks for the content. So think of it, this is how I look at technical and fundamental analysis. So I consider anything that is not technical analysis to be fundamental analysis. Ratios and understanding value, looking at market conditions, doing all of those things I consider to be fundamental analysis. So if this question, if you ask me what would I weight more, it's like asking a race car driver what's more important, taking the corner as fast as possible, but not slipping the tires to preserve the tire life, or is it braking? And the guy's gonna say you're gonna have to use both. You have to be good at everything if you want to be an extremely good investor. So I look at all of this as a strategy. It's a strategy to invest. The first thing you do is I look at fundamental analysis. I look at the value of everything. I ask myself, what is the cheapest, highest rewarding investments in the world? And that is not necessarily technical analysis. In order to answer that question, you have to do many things. The first thing you're going to have to do is do fundamental analysis. You're going to have to look at valuations of sectors. Now, the question should be, how do you value sectors against other sectors? That's the question. How do you compare valuations over time? And the only way I know you can do that is through ratios, is looking at asset versus asset and comparing it to history. So all of the stuff that I'm presenting in front of you guys, or girls, is developed by me. There's no book that you can read that's going to tell you how to do this. I pieced it all together. The questions I asked when I was investing are these questions. I said, how can I tell what the best values are in the markets to invest in? What has the potential best upsides? Now, here's the answers to these questions I had to figure out. The question is, what's the best value what's the best valued asset against other assets looking back in history? Now, what the gold guys gave me was ratios, and they mainly used it in terms of looking at relative value in precious metals and looking back in history. I just applied it to everything. And it seems that other people in this world use that particular style to find value with asset versus asset. So once you find value, once you figure out you've got value in a certain sector and it's cheap on a historical basis, then you want to look at, well, what's the upside of it? So then you look at what's the historical ratio against other assets, and if this thing fluctuates quite a bit through history, and in history this is compared, way down in the dirt, that gets me interested. I won't even do technical analysis until I understand that the value is cheap. Then I said, okay, some of these investments can be cheap, but they can be cheap for a very long time. So then I asked myself, how can I tell when something is ready? So then what I did is I looked at history, and I said, okay, so we know that these are cheap, but why are they cheap? What makes them expensive? So I looked at market conditions and I tied it into real estate. This took me a while to do. This wasn't an overnight, I just knew what the heck to do. So then when I was looking at real estate, I started overlaying certain items onto a housing starts, because the housing starts, you can see a real estate cycle in the housing starts. So I overlaid everything onto that chart in terms of ratios. I did the commodity to stock ratio. I overlaid it onto the housing starts, and I noticed a pattern. I noticed that every time we go into an expansion phase of real estate, which means that more new homes need to be built over the average, that we had a very good alignment of commodities, the commodity boom. So we had an alignment where commodities were cheap at the beginning of an expansion cycle, and they were expensive at the ends of the expansion cycle. So that's all fundamental analysis. Now I'm 100% fundamental analysis at that point. I've done zero technical analysis. I have to have that wind at my back. And if you don't have that wind at your back, you don't know that your investments are going to work. What I tried to do was align all of the data together and explain it. This isn't just use technical analysis and hope and pray that it goes up. That's going to give you an original kind of first bump. It'll get you in a big move from the back to get the momentum going. It gets your timing. So after I figure out the value and the market conditions, and those all align, I say, okay, the conditions are ripe for certain investments. We know it's cheap, and we know the conditions are changing so that our assets are going to be repriced differently in the future. Then I hit the technical analysis. I say, all right, what do these charts look like? Because you can do all the fundamental analysis in the world, but guess what? It's you determining that fundamental analysis. And you don't determine you, everyone else, does not determine the price of that asset. The market does. So you could be really good at fundamental analysis. You can see in this company could be great on paper. But what if the market disagrees with you? How do you know what the market thinks? The market tells you through charts. It tells you through prices. It tells you through volume. It tells you through basically technical analysis. So what I'm doing is I'm marrying fundamental analysis. I'm saying the conditions are ripe, the valuations are ripe, and I'm starting to see these companies move on the charts. Now, what are the charts telling me? You're going to tell that the strongest companies in the sector are going to perform very well in the markets, because the markets are going to perceive these companies, some of them, whatever they are, to be strong. It doesn't matter what my opinion is of a company, it matters what the market's opinion is. So if I see a very strong chart pattern, if I see volume, someone just coming in and buying the living hell out of it, it's a signal to me saying that the market thinks that this company is strong. So I'm going to go into that company knowing that we've got the market conditions and the valuations behind us pushing us forward, and we've got the technical analysis in the market saying, I am giving you more data that this company is good. Now, you're not going to see absolutely everything in a chart, but you can see a lot. And if you tie it all together, it gives you a far better advantage over anyone else. Now, someone made comment before, maybe the fundamentals don't matter. Well, maybe your fundamental analysis is wrong. This is where it gets the huge debate. And this is where I let the markets speak for themselves to me through data in the market. If someone says, Andy, we're going to have deflation. So what I'm going to do is I'm going to say, what are the traits that have deflation? What sectors would be deflating? What are leading indicators to tell me that we have a market problem? People would be running to bonds in the market if the market agrees with a deflation person. If we don't see indications in the 10-year and the 30-year yield dropping where people are running to bonds, the market disagrees with that opinion. Is copper going down? No, it's not. It's going up. So typically what I do is someone can have any analysis. They could have an opinion, but you have to see it in the market first. I'm not going to act on an opinion just to have an opinion. If someone says it's raining outside, I look outside and it's not raining, I'm going to say you're full of crap. I look at the radar and the radar has no rain in sight. I'm going to say no, there's no rain yet. We are good to go. So what I do is the best way is to tie this all together using all of it. This is more of a skill that you should add to your stable to make you better at investing. I wouldn't rely solely on one or the other, and I wouldn't give any weighting to one or the other. It's like you've got a Kobe Bryant and a Shaq plan, and you're saying, well, which one's better? And you're like, well, they're both very good, and we could use both to the max advantage. And it's not like saying I'm going to weight one over the other, even though you may have an opinion on who's more valuable, but you still want to use both. So I don't want to tell you one over the other, because I would not use technical analysis at all without the fundamental analysis first. I wouldn't even use it. Once it pares down what sector to look at, then I use technical analysis potentially 100%. So I'm swapping between both 100%. So it's a strategy. You fit these into a strategy. And my strategy is find the cheapest, most asymmetric bets in the market, get the wind at your back where the market conditions are in favor for these to work, use the technical analysis to verify that the market agrees with your fundamental analysis. And then you look at the companies, and then you say these are the best companies, and some of them may look like garbage. Then you look at the charts and you say, does the charts agree with my fundamental analysis? And if that is true, if all those are true and they all look good, then it's time to be game on. And it's game on in a big way. Because when these things align, they don't align very often. This is when you have to get serious. This is when you got to do the work. And when you do the work, you're going to get paid on the backside, and it's going to be big. This isn't 100% gain, 200% gain. These can be 10,000, 20,000, 30,000, 40,000% gains or more. So this doesn't come often. This is an opportunity that is a once in a 20-year life, once in a 20-year time frame. You might only get 3 in a life. And if you're studying this stuff in your 20s and 30s, you may only have 2 left. Maybe you only have 1. That's it. So that's why I'm taking this extremely serious. That's why I'm getting so much content in front of everyone, so that you guys understand, 1, how serious this is. This is life-changing in some of these investments. 2, it doesn't come along very often. So it's big, it doesn't come often, and you got to learn right now. This is big right now. And I'm putting all of these technical charts in front of you to show you data saying this is supporting evidence that the thesis is correct. And I know a lot of you guys, you haven't done the homework yet, and you don't know it necessarily as well as I do. So I'm trying to get you more and more information and content in front of you of how to play it. And potentially, maybe it's not really about convincing you, it's about educating you so you know what to do. And a lot of this content is very powerful if you can understand it. So hopefully it's getting to you, hopefully it makes sense and you're understanding it. Hopefully some of our wins get you a little bit more confidence. And hopefully the strategy that I'm putting in front of you makes sense. If it doesn't make any sense, please leave more comments below. This did take me a while to put together. And I know this stuff pretty well, like inside and out. So you can ask a whole bunch of different questions. You can try to poke holes in this thesis all you want, and I can answer back either through videos or through responses in the comment section. Thank you for asking the questions. If you guys have any other questions, put it in the comment section. If you enjoy this content, give me a thumbs up and subscribe to the channel if you like making obscene amounts of money. This is Finding Value.